Hello and welcome to the December 15th, 2009 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're featuring Ameristar Casinos. This is a $956 million services company that develops, owns, and operates casinos and related hotels in the United States. Back at the beginning of the year, you'll see that ASCA actually rose from under $7 in mid-January to over $22 by early May. That was about a 300% move, tripling the market cap of the company in just a little bit, less than 4-month time period. After coming back down here and testing the 20-day moving average, you can see it went back up, put in an equal high, but at the same time put in a much lower MACD reading. This is a negative divergence. Many times this will signal at least short-term weakness and sometimes extended weakness, and in this case ASCA for the next several months did trend lower, although most of the volume or most of the move to the downside was accompanied by lesser volume than what we saw on the way up. Now, with this big move at the end of April and early May, you can see that the prior price high was about $15.50, and it had gapped up from about $14.50. And notice when we came back down, we held first in the second week of September at about the $15.50 level, and then the next two moves down went down and threatened this gap support and price support line before rebounding from that support. Now it appears that here in the early part of November we are beginning to resume a new uptrend. We went down after going down, putting in lower lows and lower highs for several months. We actually went up and put in a higher high over the October high in mid-October. So it appears, at least on the surface, that we could be starting a new uptrend. The other thing that I find interesting is on the weakness on Monday, you can see how the stock traded intraday down below this gap support level at about 1640. We went down to as low as 1601 before reversing, coming back up, holding that gap support level, and printing this hammer on increasing volume. So that suggests a reversal is more likely than not at this point. To the downside, if you want to keep a tight stop, we'd watch this 1601 area, which was the low on Monday. If we break below that with heavy volume, then you might want to be more careful. Otherwise, we would expect ASCA to rally here and go back up and retest this 18 level. And in fact, I actually expect it to break back above 18. I think what we could be printing here is a long-term inverse head and shoulder, where you come down here, you put in the left shoulder, you come back up, you put in a neckline, we come all the way down here, we put in the head, the inverse head, and now I think this could be a move up to potentially test this 21 level to put in the right side of the neckline. So I think in the near term and maybe even the intermediate term, ASCA looks like a pretty good candidate to move higher here. But again, as always, keep your stops in place. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.